If you own a small business in Romania, listen up. A massive tax overhaul is coming on January 1st, 2025, and you absolutely need to start preparing for it right now. So let's just jump right in with the single most important number you need to know.
This number. Burn it into your memory, because it's the most important figure in this entire breakdown. Starting in 2025, this is the new annual revenue limit for your business to qualify for that super beneficial micro-enterprise tax regime. It's been cut in half, and trust me, that changes everything.
And let me be super clear here. This isn't just some minor adjustment or a little percentage tweak. No. We are talking about a fundamental, dramatic shift in how things are done that's going to directly impact thousands of companies. Okay, so let's start by digging into the sheer scale and speed of this new reality, because what we're seeing is a really rapid compression of the rules that, so many businesses have been relying on for years. Now, this slide right here tells the whole story, doesn't it? Up until now, the ceiling was a pretty comfortable €500,000. In just a few months, bam, it drops to 250,000. And just look ahead, the plan is to slash it again to just 100,000 in 2026. That window of opportunity, it is shrinking, and it's shrinking fast. So with such a huge drop in the revenue limit, the obvious question is, well, who still qualifies for this special tax status? Let's take a look at the new and much stricter criteria. First, just a quick refresher on why this regime is so incredibly popular. It's what's called a turnover tax. So instead of calculating all your complex profits by subtracting every little expense, you just pay a very small percentage of your total sales. For small business, that kind of simplicity and predictability is just golden. In this chart, wow, it shows you exactly what's at stake. I mean, look at that difference. On one side, you've got this tiny 1 to 3% tax on your revenue, and on the other, the standard corporate tax rate of 16% on your profit. Losing that micro-enterprise status means you're jumping into a completely different and potentially much, much higher tax bracket. So to qualify, you have to meet all 6 of these conditions. Think of it like a compliance checklist, right? First, stay under that new €250,000 ceiling. Then, make sure you've got private ownership, your company is active, and you have at least one employee that you're paying Social Security for. And be really careful with these last 2. A majority shareholder can only have one microenterprise, and you absolutely positively must file your financials on time. So, what happens if you cross that line? This part is absolutely crucial, because the change isn't just a penalty, it's a permanent one-way street. Let's just ask the question directly. What happens if your revenue tips over that 250,000 mark during the year, even by just €1? Or what if you fail one of those other conditions? Well, the consequences are immediate, and they are severe. This table here really breaks down the 2 worlds. As a micro-enterprise, your life is simple. A low rate on your gross revenue. The moment you're disqualified, you are shoved into the profit tax system. That means a 16% rate on net profit, which means way more complexity, and you've got to meticulously document every single expense. But look at that last row. This is the key. The switch is permanent and irreversible. And this quote just says it all. You can't fix this after the fact. Once you're moved to the standard profit tax regime, there is no going back. Ever. You can't just dip back under the limit next year and get back in. This makes proactive planning not just a good idea, but absolutely essential. Okay, that was the scary part. I get it. Now, let's talk solutions. Let's build your compliance playbook. What are the concrete, actionable steps you can take right now to get your business ready for 2025? First things first, you need to become obsessed with monitoring your revenue. Use accounting software to get a real-time dashboard and set an alert for when you hit, say, 75% of the limit. That'll give you time to react. Do quarterly reviews to project where you'll land at the end of the year. And hey, if you're getting close, you can consider some strategic invoicing, like maybe delaying a payment until January to stay under the wire. It's also really important to know if your specific industry has any special rules. So if your business is in a sector like IT, software development, or hospitality, you're automatically subject to that higher 3% turnover tax rate, even if your revenue is way below the maximum. And please, remember, it's not just about the revenue. There are 2 other tripwires that can knock you out of the system instantly. First, you have just 30 days from starting your company to formalize an employment contract. Second, filing your annual financials late is an automatic disqualification. It doesn't matter if your revenue is only €10,000.
A late filing triggers that immediate and irreversible switch to the 16% profit tax.
So the main takeaway from all of this is pretty simple. For any small business in Romania, just sitting back and waiting to see what happens, that's just not an option anymore. You have to get ahead of this. Proactive planning, monitoring, and adapting your strategy are now fundamental for your company's fiscal health and, let's be honest, for its survival.
And that really leaves one crucial question for you to think about. When you look at this new, narrower road ahead, with a much lower ceiling and way stricter rules, is your business truly ready for what's coming?